We also love companies that have royalties, whether they're on oil and gas development, royalties on precious metals, royalties on other critical minerals. We like those a lot. 2025 was a fantastic year in the markets. It was one of those years where the Canadian stock market, represented by the TSX, beat the US market. It was a golden year. Gold stocks were up 65%. Silver did even better, up 147%. And of course, it was the reintroduction of Donald Trump's second term. So we got introduced to tariffs. We got introduced to the repeal or scale back of tariffs. In Canada, we got a new prime minister. In Canada, we also learned that pipelines aren't a dirty word. Pipelines can also be a nation-building exercise. So that was all positive. Also, 2025 was a year of lower interest rates. So all in all, it was a fantastic year. And what I learned is that precious metals can run very hard and fast. And also silver had a fantastic year. So all in all, two different leaders in Canada and the United States, a return of nation building in Canada, and the very strong performance of the Canadian market in 2025. 2026 has started with more macro events. We saw in late 2025 the US building up their military presence in the Caribbean off the coast of South America. We actually were surprised when the US invaded with a small Delta force into the country of Venezuela. Fortunately, there weren't a lot of casualties on the US side. The US captured the Venezuelan leader Nicolas Maduro, and he is now awaiting trial in the United States. So we expect more macro events like this in 2026. We're expecting quite possibly an end to lower interest rates in Canada. The US, we may get one or two interest rate cuts, but not as many as some analysts may be expecting. It may be a cliche, but 2026 will be a stock picker's market. We think dividend stocks may not have fared as well as they should have in 2025, but steady, consistent, quality companies will do better in 2026. We think the economy will expand in both Canada and the US. This is a good setup for industrials. More infrastructure projects in Canada and the United States will benefit companies on both sides of the border. So even though there are geopolitical events that have to still unfold, i.e. there's been a 4-year war in Ukraine, between Ukraine and Russia, even though Canada still has to renegotiate the USMCA, or as it's known, CUSMA in Canada, we think there'll be some positive events. We think there'll be positive resolution toward the second half of 2026. And of course, we will be watching earnings and valuation. So the valuation in Canada has come up. The valuation in the US is trading at near all-time highs of 22 times forward earnings. However, we still see good opportunities in Canada, and we are finding our spots in the US market. So industrial companies are a good place to be for us in 2026. But overall, there are some, as always, puts and takes. Lower taxes in the US will help the consumer, and lower interest rates. If Trump follows through and the government agencies buy some mortgage bonds and they make housing more affordable, that will impact the US economy, housing, in a positive way. So overall, we're positive. We may not get as strong and robust returns as we had in 2025, but overall, we have a positive outlook for both the Canadian and US market in 2026. The way we invest at NCM and with the NCM Dividend Champions, we often look for sectors that may have been a little neglected or discarded. So we see some opportunities in energy, in particular energy infrastructure. We have a company based in Red Deer, Badger Infrastructure. They get 90% of their revenues from the U.S. This is not just a company that provides daylighting or what's known as trenching services in the oil and gas industry. Their exposure to the oil and gas industry is very small. It's about 5-6%. They are helping with the infrastructure work that go in the construction of data centers, both in the US, down in Texas, and in Canada. We like that. We like the continued build out and expansion of LNG Canada. The government of Canada, with a new prime minister, is committed to large national building infrastructure projects. So we like companies like Tormont that can provide the equipment. Energy, as I mentioned earlier, is underloved. So we like some of the companies in there, such as a Tourmaline and a Freehold. So the theme would be, we're always selective. We always find opportunities that may fit in one category or sector or another. But we do like infrastructure. We do like industrial stocks. And we've seen some solid names like a Republic Services that has not really participated in the broad-based or in the rally. Not all the stocks have participated. So we see more companies participating in a rally in a stock market in 2026. So as always, what we're looking for is companies that are very strong, that they produce stable cash flows, pay a dividend and can grow their dividend, and have the ability to withstand shocks, whether that shock is internal or external. So once again, I've mentioned a few names, but we like the industrials for what they can do in a recovering economy. We like the infrastructure build out in both countries, Canada and the US. We like energy as an underloved, underowned sector, very good valuation. And we think earnings will grow. Multiples may come down a little bit. That's why there's more room in Canada to grow. But overall, we have a positive commitment and tone to the market in 2026. One of the areas we like in 2026 is hard assets. Hard assets enable the building of infrastructure. So whether it is companies that provide earth-moving equipment to build new buildings, docks, wharfs, pipelines, etc., we like that a lot. There is actually companies we own that own industrial warehouses that are used in the new economy with e-commerce. We also love companies that have royalties, whether they're on oil and gas development, royalties on precious metals, royalties on other critical minerals. We like those a lot. So there's numerous ways you can play infrastructure build out through hard assets. It could be companies that have, as I said, the machinery, companies that have landfills where there is extraction of natural gas. So hard assets to us are very good. They maintain their value, and there's quite high demand for hard assets right now because they're enabling the growth and development of the economy, not only in natural resource extraction, but overall the whole economy. So hard assets are a key area of the fund. The NCM Dividend Champions is a fund for all seasons. We can navigate any macro environment, robust economy, lackluster economy, or slow economy. The NCM Dividend Champions now has a 5-year performance track record. Although 2025 was a very strong year for the TSX, it was up about 28% on a price return basis. If you take out precious metals, gold and silver, which are notoriously volatile, it was up about 17.4%. That's right in line with the performance of the NCM Dividend Champions. We look for the best companies in Canada and the US. Currently, we're at about 31% foreign content, which is all in the US. The rest is in Canada. We believe 2026, we can still find good quality companies. Canadian companies are trading a little bit cheaper, but we look beneath the hood in the US. We don't always have to look at the 10 largest market cap companies in the US. We can look at medium and smaller cap companies by US standards, and we can find some good value there. So I would like to thank our long-term unit holders of the Dividend Champions. We're continuing to work hard, and I'd like to welcome any new unit holders that want to invest with a growing, strong company and invest in the NCM Dividend Champions in 2026.